Good afternoon. You're watching Bloomberg Quint and I'm Navneet Saluja D'Souza. Here are the headlines. It's a volatile start to the December series for the markets. The Nifty gives up early gains to trade near the 10,200 mark. It's turning out to be a good November for automakers with Maruti, Bajaj Auto and Ashok Leyland posting healthy double-digit growth in monthly sales. Biocon gains more than 3% after the European Medicines Agency accepted the marketing authorization application for the two cancer drugs. And India's manufacturing gauge expands for the fourth month in a row. Manufacturing PMI stands at 52.6 for the month of November. Well, with that, it's over to Hot Money.
Thanks for that, Navneet. And hello and welcome to Hot Money. This is Bloomberg Quint's Live, India's first digital live streaming business news service. And in this show, we get you a complete wrap of all the stocks that are buzzing in trade. I am Agam Akil, filling in for Darshan Mehta. So let's welcome in our experts then. We have Kalra of Target Investment advisor Sharmila Joshi, as well as TS Harihar of HRBV Client Solutions joining us on this show. Thanks for joining us, guys. And of course, on the show, we will be discussing 5 stocks, or actually a lot more than 5 stocks. Starting off the Hindalco, TeamLease, Saregama, Voltas, and perhaps a view on the auto ancillary space and what our experts prefer in that area. So without any further, delay, I'm going to start off with Hindalco. And, this stock has moved up by as much as 56% over 1 year. We have seen a little bit of an uptick when it comes to aluminium prices. Alumina prices have also gone up. In fact, on a year-to-date basis, well over 40%. Now, what does this mean for earnings for the likes of Hindalco, and if at all it could be pitched against other players in the aluminium space when it comes to something like Vedanta or Nalco for that matter? Well, Sharmila, I'm going to start off with you. What is your view on Hindalco?
Well, actually, I'm quite positive on Hindalco, and I must admit that this is a stock that I've liked since it was about 90 rupees. So at 240 rupees, I'm a little mixed as to how much upside there can be, because you've already seen that run from 90 to current levels. But I think right about the time you started liking the stock was also the news that aluminium is seeing increased demand globally, and I don't think we've really seen that kind of demand percolate into the domestic picture as yet. So Hindalco benefited largely because of their whole Novelis acquisition that they had. And I think even if you look at the current results of the last quarter, it is actually the copper business that's done well, and that has sort of offset the aluminium earnings to a certain extent. But I think, yes, going ahead, that's what I would really emphasize on, that aluminium products will see an increased demand, and the fact that going into this year, aluminium has tied up for coal, beg your pardon, which is one of their main requirements. So either because of captive mines or linkages, they've already tied up for most of it. Right. So their sort of margins could be lower, but they're protected to that extent. So yes, I think this current year I would expect to see that aluminium demand to pick up, and that's why I would continue to be positive on the stock.
Sameer, you're a little more circumspect because you have a neutral stance, if I'm not mistaken.
Yeah, I'm a little neutral first. On the positive side, see, every car right now per vehicle, around 400 pounds of aluminium is used in the car. Right. That is meant to go up as more emissions and the lighter car has to become. It has to be stable, and aluminium portion has to increase. Right. So on the demand side, I don't see an issue between that, because automotive is a big consumer of aluminium globally as well. On the other side, they have been reducing the debt. So they have targeted a 800 crore interest cost to be reduced by this year, which is another good point. The only thing which I see an issue, she's already mentioned about the coal linkages, is the shortage of their captives. There was a shutdown at Nalco. My only point is how that materializes going forward. I would rather wait for a while and see, and how it impacts the margins. Because the only point is, if the shortage still persists, then the margin issue might creep up more, because they have to figure out as a higher cost of, because the captive goes out and external, they'll have to maintain it. Right. Because any smelter which shuts down takes 6 months to start up.
Okay, so Mr. Harihar, you're positive on this So, yeah, what is your view as far as Hindalco is concerned?
See, we like the metal space as a whole, and within the metal space, I think we find Hindalco to be quite a good bet. I think a couple of reasons. Copper probably will continue to be a kind of a cash cow as far as Hindalco is concerned. So I don't think copper is the issue. The big issue, I think, is Novelis, and even in Novelis, the big issue is capacity expansion.
Right.
Because what's happening today is Novelis is actually operating at almost full capacity. And, you know, with the way Europe has been growing, you know, this 2.7% growth is back, Japan is getting back growth. I think the global demand, including China, would actually be on the way up. So from that perspective, we like Hindalco, but we are betting on the fact that over the next 2 years, we could see a capacity expansion as far as Novelis is concerned. I think if that happens, that could be a major boost as far as Hindalco is concerned. But even otherwise, at these levels, I think 240, 250, we believe that just to be in sync with the metal cycle, we think Hindalco will be a good bet at these prices.
Okay. Samir, I'm going to come back to you. So you are neutral right now. What are the few factors, if you could tell us again, that you will be watching out for before you can actually change your mind on Hindalco?
My thing is, till the time coal shortages doesn't go out of the system,
right,
I'll not enter. Because the only point is, it's not only increasing the, you know, the point of raw materials or the costing of the whole system, it's also pressing down the capacity issues.
Right.
So the danger of tomorrow a smelter shutting down,
right,
is increasing. So the moment that actually becomes a reality, I see a certain downside to the stock.
Okay.
Because it takes an impact of 6 months. So that's almost 2 quarters to start up again.
All right.
So that is a point where I really want to have a look before I even take a call of being a bullish.
Okay. And Mr. Harihar, you also mentioned that you're positive in the metal pack as a whole. So if you were to pitch Hindalco as against some other metal companies, would you still go ahead and remain with Hindalco, or there are other better opportunities in this area?
No, in fact, we like both. We are not too positive on steel, because if you look at the latest COSEC numbers, I think steel has taken a hit, because the kind of output growth we saw in the last probably 13, 14 months on the back of the government support in the form of, more from a tax point of view, I think that seems to have saturated.
Right.
And I think going ahead, we could see steel kind of, I would say, performing at market par rather than outperforming the market. But I think the real alpha could probably come from the copper and the aluminum space, where I think Vedanta and Hindalco are fairly major players. So we like both. We like Vedanta, we also like Hindalco at these prices.
Can I come in there?
Yes, of course.
I mean, while I continue to like Hindalco, I think, just to take off from what Mr. Harihar was saying is that, one of the reasons why I like this space is also that we've seen a global recovery in the entire metal space, and that doesn't seem to be over yet. Though we are already maybe 1.5 years into that global recovery cycle, I don't think we are done yet. And the reason why I like Hindalco is that I prefer it over the other aluminium and other metal plays. And if you ask me on the steel side, I would still stick my neck out and go with the JSPL. Right. Simply because I think they've sorted some of their issues, and their capacity expansion is in place, and now that will come in the bottom line.
Okay.
So I mean, that's where I differ. I think I like,
right.
He likes Vedanta over the steel play, but I would still go with a JSPL and Hindalco.
Fair enough. Fair enough. Okay, so, well, at least as far as Hindalco is concerned, we have 2 positives, and Samir remains neutral as far as the stocks goes. But we'll move on to another, well, an interesting stock, TeamLease. It's into human resources, as we all know, and this stock also has done very well for itself. It's gained as much as 50% in the last 3 months, 158% year to date, and it has also made a host of acquisitions recently, because of which a lot of the market is also, well, gunning behind the stock. So, well, Mr. Harihar, I'm going to start off with you. What is your view on this particular counter?
Well, we like the stock. Let's admit there is not a very long history as far as the stock is concerned.
Right.
But I think whatever we understand about the model, we like the stock for 2 reasons. Number one, this is a company that plays more in the flexi staffing space, not exactly the normal staffing, but the flexi staffing space. And I think flexi staffing is something that is taken off in a big way in India. See, there are 2 trends which are favorable for flexi staffing. One is most of the companies in the IT space and the other industries are looking at reducing headcount. Now, how do we shift from a normal recruitment process to flexi staffing is one area where TeamLease is going to benefit in a big way.
Right.
The second is that TeamLease works in a very big way in the unorganized segment. It is not exactly only in the organized, but also an unorganized segment. With GST, there's a lot of unorganized space getting into organized. So I think the manpower demand is going to go up in those areas. Valuation-wise, you can always argue that it is, probably at par with most of the global names in flexi staffing, but I think that is fine. As far as I'm concerned, I think considering the potential that it's placed at right now, there appears to be huge potential, and we like the stock. Long-term targets could be huge, but at least the next 1 year we continue to be positive.
All right. Well, Sharmila, all said and done, it has run up substantially, which means that valuations just may be an issue.
Absolutely. You know, I think that I completely agree as far as the whole flexi staffing story goes. I mean, it's a new kind of business that we are looking at. So we don't know what could, in that sense, you know, it's very difficult to predict what the potential for that could be. GST, labor reforms, you know, all these things are sort of work in progress.
Right.
And in fact, this whole organized way of hiring staff could be the story to go with in the future. But the stock has already, I think, discounted a lot of these positives.
Right, yes.
I think even to that extent, if you see the numbers this last quarter, they were like so-so. I mean, you know, there were certain of their verticals which didn't do that well. But of course, the company says that typically the second half of the year is better for them. But I think even if you take that into account, I think a lot of the positives are now in the price for me.
Right.
So I would just wait and watch the stock for a while. But I do agree, like, you know, this, as Mr. Harihar was saying, this is a new sector, new type of business.
Right.
So it definitely warrants that you put it on your watch list, but I wouldn't buy it at this level.
Samir?
So I'm neutral, but I'm a little bullish over the firm.
Okay.
Neutral in the certain sense, they have done 5 acquisitions in past 15 months.
Yes.
And those acquisitions have not been only in a single sector. 2 or 3 acquisitions have been out of their whole purview or
Right.
their whole
Right.
expertise. Now, how these 5 acquisitions play up.
And to
So
a
the
certain
fifth-
extent, if I can
Yeah,
argue, these acquisitions are relatively smaller. I don't know to what extent can
see,
this
the
pan
only
out.
point is like last acquisition which they did of Evolve, right?
Right.
It's a Pune-based. It's into telecom hiring, so it does the same work as them, and it has a good growth. It had a revenue of 40 crores 3 years back, and today it has a 100 crore revenue.
Okay.
And they paid around 38 crores for it. So
Right.
they're doing smaller acquisitions, I understand. So they're doing something which a Godrej has done, a Motherson Sumi has done. How these guys come out of these acquisitions, because it's a make or break.
Yes.
Because you've put around 200, 300 kind of crore into that acquisitions. Now, how do you get a 5 times, 6 times return out of it? That's more important.
Right.
Till that time, as everyone is saying, the valuation is there. We had recommended it and we still hold it. But the only point is we rather look on for next 18 months for these kind of acquisitions to play out.
Right. Mr. Harihar, you wouldn't be bothered by the fact that, you know, a lot of reports are suggesting that the hiring outlook, at least in the near term, next couple of years, does look bleak. You wouldn't be bothered with that aspect?
No, I would see that more as an opportunity for TeamLease. You know, as I said, when you talk about flexi staffing kind of an area,
Right.
it's not the hardcore recruitment that your Monster or Naukri. They do the hardcore normal
Right.
recruitment.
Right.
These people are more into the flexi stuff. So I think the advantage with flexi staffing is that you're not exactly going along with the upsides and the downsides of the business cycle. So I think that could actually work positively as far as these people are
Just to
concerned.
interrupt, these kind of cycles help the contract-based hiring.
Right.
Because what happens, the business is so volatile and the down cycles are unexpected, as in when the up cycle will come. So people like to do more contractual based hiring than taking their on-roll and permanent hirings. So that's where these guys help in.
All right.
Also, the cycles can change very fast, right?
Yeah, that's
I
right.
mean,
Yes.
You know, it's
Right.
not that, okay, I agree with you that perhaps from where we stand today, next couple of quarters it looks bleak, but I don't think it will take that long for that picture to change.
Right. Of course.
And then they'll be right there because, as he said, they've done the acquisitions, they have the, all the necessary gunpowder in place. So I think, definitely you need to put it on your watch list, but it's just the price that really is.
Right.
The only plus point which I see is, the 2 industries they are in, IT and now telecom, the manpower is the main constituent.
Right. Absolutely.
As in
yes.
for the running up of the business and the running down of the business.
Right.
So that's where.
Okay, so we have a positive view, from Mr. Harihar, and Sharmila and Samir are both gonna, at least hang on, at least for now, because of the way the stocks run up. And that brings us to the next stock, and that's Saregama. This stock also has done very well. It's up as much as 29% in just 1 month, and 280% a year-to-date basis. This is also largely on account of the various changes that are brought about in terms of strategy. Sharmila, again, I'm not sure if you are very positive on this one.
No, I'm not. And again, I think for 2 reasons. One is, as you said, that the price run-up has been so huge.
Yeah.
And, this whole thing of monetizing your audio, whatever bank that you have.
Yes.
This is again a story I've been hearing for the past 5 or 6 years. So perhaps in that case, in a sense, this environment is more conducive now because you're talking of 4G, etc. And maybe that could help them unlock that value. But, for this price, I mean, I'm not so sure.
All right. Mr. Harihar, you are positive?
No, I would agree with what Sharmila says. See, my understanding is they're getting a valuation of about 36 times 2-year forward earnings. That's a very, very, I think, ambitious kind of multiple we're looking at. See, I agree that in the last probably 1 year, they have built up a library. They have managed to monetize part of the library. But let's understand that this business is it's an extremely shaky business. See, we knew what happened to Netflix the moment Amazon came in. So this entire business of content is an extremely shaky business, because even if you have the content library, if the way content delivery changes, your entire business model will go for a toss. So I think that's a big risk. And we are seeing the Indian content business getting institutionalized. Reliance taking over stake in Balaji. So I think the business is getting institutionalized. So I'm not sure how much 35 times 2-year forward is justified. I agree. The company is a good stock. Library is great, but I think valuations are a tad too steep for comfort.
Right, and Samir, do you agree with these views?
I am a little neutral on it. Right. I'll give you the reason. Because the upside came in when they launched Caravan. Yes. Caravan was their hardware story, which they're trying to play. So the monetization over there, how it happens, every Caravan they sell, that has an MRP of 6,500. Yes. On their top line, it comes to around 4,000 after all the GST and everything going out of the pocket. Okay. Now they have around 5,000 outlets selling these Caravans today. First quarter itself, they did around 95,000 sales. So they are into a B2B sale now. So licensing is a different thing. Now what has happened, they are selling it to retailers. Right. So it becomes a wholesale market for them. And that has a margin of 18%, EBITDA margin of 18% kind of. So that helps driving a new business. How successful it will be and how long lasting it will be, that's something I'm also worried on. And secondly, the only point which I saw on a big negative, because these companies have some issues, like they had a fixed asset of 83 crores in 2016. Okay. 2017 they had 197 crores. Right. So they invested into a freehold land and 120 crores. Now that, from my point of view, how is it accretive to your earnings? I really don't know. So that kind of spend worries me in the whole dynamics of the growth story and everything. Okay. So I rather stay away and look at it before I invest.
Right. So I know all three of you are, well, should I say cautious when it comes to Saregama, but I do just want to discuss their licensing fees, which still gives them a substantial amount of cash flows.
63%.
All right. So yeah, so Sharmila, that really wouldn't help out. You are more concerned about valuations. It's not as much about the cash flows and the kind of, the revenues that it brings.
Yeah, I mean, precisely, because I mean, as we said, this is a story, you understand the positive aspects of this story, whether it is Caravan, whether it is their licensing fees, etc. But I mean, yes, somebody has bought stake into it, and all those things are good, but beyond a price, I don't know.
All right. So there you have it, guys. Well, at least as far as Saregama is concerned, because of the fact that it's run up so much, well, we're getting largely neutral to negative views from our experts. And with that, we move on to, well, consumer durables. And we have Voltas. This is, once again, another stock which has been buzzing. It's done very well. Today, it's down as much as 2.6%. But, well, it has run up as much as 18% in the last 3 months. Well, a lot of analysts out there do argue that it has a very strong product pipeline. It's been in the business for so long, and which is why it also has a very good distribution network. But the real question is, again, FY19 estimates standing at around 30 times. Does this warrant that kind of valuation? Well, I don't know. So let's go across to our experts and find out. Mr. Harihar, you're neutral on this counter?
Yeah. See, I think there are a couple of things. One is, if you look at the stock from a slightly longer term perspective, let's say about the last 3 or 4 years, I think the stock was about 110 and has gone to about 700 or whatever. I think it's been a 7-bagger virtually. I don't exactly remember, but it's been virtually a 7-bagger. Right. See, let's understand that Voltas' biggest strength in the last rally was its focus on Tier 2, Tier 3 and Tier 4 cities. That has been the large focus of Voltas. And I think what is happening now is they are expanding their white goods palette in a very big way. And that is something that makes me a little uncomfortable. Because let's not forget that the sector is overcrowded. Margins are always under pressure in the sector. And I think any major expansion is not great. I would still suggest that Voltas would have been better off sticking to its tier 2, tier 3, tier 4 and its existing product line of air conditioners. I think getting into too many white goods is not a great idea. And I think you rightly set up the valuations. I think 30, 35 times 2 year forward, I think is a little too ambitious. I think probably at these levels, I would just stay off Voltas. Probably wait for a correction. 20-25% lower, we can reconsider, but I think not at these prices.
All right, 20-25% correction weighted. Samir, how about you?
So I'm neutral over here. Whatever said and done, they have a market leadership in AC and everything. That everyone, I think, who's invested or who sees it, knows it.
Right.
The only thing I'm looking out is they were planning to launch it in second half. The Beko. So Beko is like a Turkish brand,
right,
which they did a 50-50 JV with. And they were launching a washing machine, refrigerators, dishwashers in that line. They were planned to launch in FY18 second half, but they pushed it back to next year's second half.
Right.
The given reason by the management is it's already too crowded and we don't want to come as a crowd. Same strategy. We want to re-strategize and see. Now the only point is when the management is skeptical and pushes back a certain brand launch. I'm not taking away anything from their experience, but the only point is if they already themselves understand that it's a very crowded and very dominant by certain players in certain products, then how do you fight them? They have a plan to take a market share of 10% in the next 3 years.
Okay.
Because maybe that's why that EPS growth, which is accounting for that valuation, is coming in. Right. But the only point is at what cost they achieve that market share, I really don't know. Because they will have to give heavy discounts to get into that play.
Right. And Sharmila, I know you're neutral as well, but enough as we've spoken about the negatives, are there any positives? And of course, you can talk about your own negatives as well.
Well, honestly, when I recommended this stock, my target was 620. And as both Harihar and Samir have been saying, it did that level so fast and it went all the way to 700 that you were like, what exactly happened here? Because, I don't think that the business as it stood really justified a price, the way the price ran away. Because let's remember, at the end of the day, you're selling air conditioners and the other line is your electromechanical projects, where whether it was a Blue Star, whether it was a Voltas, everybody's margins had taken a hit.
Yes.
So I think the positive that one can look at it is, first of all, in ACs, they say they have the best margins.
Right.
And hopefully they'll kind of, because of their kind of presence they have in tier 2, tier 3, they will sort of maintain those. And their EBIT margins on those EMP projects will improve.
Right.
That is what the management is expecting. So that could be the positive that you could look at. And of course, this foray into other consumer durables.
Yes.
Because that's the big story that's gotten re-rating across. I think on an earlier show we spoke of IFB Industries, which has again skyrocketed. So I think any stock in that space has just jumped and gone through the roof. So I think those would be the things I would look for. Whether your margins improve in your EMP projects as you all are expecting, and they go up to that 7% kind of a range, and how you continue to do in the AC business.
All right, so that's the view coming in as far as Voltas is concerned. All three of our experts fairly neutral on this counter on the back of valuations and perhaps some, should I say, reservations with respect to them branching out into other white goods area. And with that, we'll move on to the final topic of the day, and this has been the darling sector of a lot of mid-cap investors, and I'm talking about auto ancillaries. Once again, it depends on what subsector of the auto ancillary that you choose to delve into, but all of them have had a very good run along with the markets moving up. So it could be something like a wiring harness business, or for that matter a car battery business, or it could even be a tire company. Well, Samir, I'm going to come to you. If I'm not mistaken, you do like Motherson Sumi, which has been on a steady uptrend.
Yeah, so I like Motherson Sumi and I like Amar Raja in these spaces, because the only plus point of Motherson Sumi is they've done excellent acquisition and turning them around.
Right.
So their main business is the cash cow for them. So they have utilized that cash really well.
Right.
Amar Raja I like because first of all everyone became too negative on it. So the lead prices increased right because of the speculation.
Right.
So the 13% rise is half the way absorbed. they have to do another 5 to 6% increase of prices. Maybe they'll do in next quarter or so. So that will absorb the lead prices increase which came in. The results this quarter surprised everyone on the upside.
Right.
And now the only plus point is they have a very big share in the replacement market. So how that replacement market share grows, they have grown it for past 5 years very nicely. And now main thing is the lead prices, which will, I think, cool off, which are started to cool off. And even if it doesn't, there are only 2 players. So the pricing power is still very much over there.
And what advantage do you think it has over Exide?
The only Exide is, the main advantage is everyone is too positive of Exide right now.
Okay.
Because what happened at a stage, everyone became too negative of Exide, and Amar Raja was expanding capacity over that time. So over there, the market share gain was very good. Amar Raja has started giving more incentives on the replacement market to gain that market share.
Right.
So that is more important from my side, and they are exploring the solar as well. So solar market for them is going to be a bigger fight for now these 2 battery makers, which I see in next 2 to 3 years.
All right. Yeah. Well, we'll be watching out for Amara Raja, of course, and moving on. You have a relatively less tracked stock in the auto ancillary cast.
Yeah, I mean, I chose to go with a less track because I think that these stocks are in the space. Whether it's an Amara Raja tire companies, Motherson Sumi, I like all of them.
Right.
So another stock that I do like is steel strips and wheels. The kind of business that it has, it's been growing very conservatively. Clientele is very sticky. They stay with, you keep hearing of them getting repeat export orders. So, I like the way this company is growing slowly. They have a brownfield expansion coming up in Chennai. They have an alloy wheel coming up in Mehsana, Gujarat. And alloy wheels have better margins. So going forward, you will see the shift towards that. So they seem to be in a niche space, and they're using their advantages to their, they're fully utilizing the niche position that they have. So I think this is a good stock to have.
All right, so that's steel strip wheels. And finally, coming down to Mr. Harihar, you like Motherson Sumi, if I'm not mistaken?
Yeah, it's a repeat again, And I like Motherson for a very simple reason. I've been tracking the stock for about 15 years. And, the one thing I find unique about this stock is that every 5 years, they give a 5-year projection with the growth in revenue.
Yes.
And that's the only possible company I know of in the whole of India which has met each set of 5 years have met their projection of growth. And I think now the latest projection for 2020 is about $18 billion of total. That is a total year. And I would probably go with their conviction because they've delivered consistently in the last 15 years. Every 5 years they've delivered that revenue growth. The second thing I like about them is that they're into simple products. They're into complex products. And the advantage of simple products is when something like Volkswagen happens, the impact on Motherson Sumi was not much.
Right.
Okay. So that is one of the big advantages of being in simple products. The third thing, look at the order book position. I think it's about 15 billion euros or something. It's about 1,20,000 crores equivalent in India. Now, I think with that kind of an order book position and with EU growth coming back to about 2.7%, the euro likely to strengthen. I think the next few quarters appear to be very positive as far as Motherson is concerned. So we have a very strong positive view on Motherson. Even I think the next 1 year we see at least 20 or 30% upside on the stock.
But Mr. Harihar, if I may come in here, the management has said that they will make that revenue target of for FY20 provided that they go in for more acquisitions. Does that concern you?
No, again, as we heard earlier also, a lot of the acquisitions they've done in the last 15 years, I think they've managed to integrate beautifully. Right. In fact, Motherson, again, I must say is one of the companies that has not had culture problems, that has not had losses due to acquisitions. They actually managed to integrate most of their acquisitions very well. So I would probably bet that they will be able to manage the acquisitions in future also.
Okay, so there you go, guys. Well, we have 3 good companies looking up, at least as far as the auto ancillary sector is concerned, but we're out of time now, and with that, it's a wrap on Hot Money. Of course, there's plenty to look forward to, so stay tuned in a Bloomberg Print. But I would like to thank all our experts for giving us their views. And yes, keep coming back for more.